Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at NioCorp Developments. This is really a pivotal moment for the company as they attempt that difficult transition from concept to actual construction.
If you find our talks useful, please consider subscribe, like, and comment underneath. It really helps us keep the lights on and the analysis flowing.
So let's get right into it.
Absolutely. It is Monday, January 26, 2026. Grab your coffee or, depending on your portfolio, maybe something a little stronger, because we are looking at a company that has been on an absolute emotional roller coaster. We're talking about NioCorp Developments. Now, if you've been watching the junior mining charts for the last year, you know this name. The stock has seen a massive 300% return over the last 12 months.
Which, let's be honest, is incredible performance for this sector. I mean, that is usually the domain of high-flying tech stocks, not dirt movers in Nebraska.
It is, and there's always a but in this game. It recently took a bit of a chin check. On January 21st, just last week, the stock dropped nearly 8%.
Yeah, down to around that 605 mark.
And that volatility is exactly why we are analyzing it today. Because despite that dip, the headline news is actually huge.
Oh, it's substantial. In fact, it's the news investors have been waiting years for.
The board has officially approved the portal project.
Right. And I think we need to pause here and decode that term for a second, because for anyone who hears portal project, it sounds like something out of a sci-fi movie.
Totally, like they're building a doorway to another dimension or something.
I mean, in a financial sense, they hope they are. But physically, the portal is just the entry point for the underground decline. It's a $44.6 million project to begin actual tunneling.
So this is it. We're not just talking about updating a PowerPoint presentation anymore.
Exactly. This is the hardest hurdle for a junior miner. They're stopping being a slide deck company and starting to be a dirt-moving company.
Right.
And construction is slated to start, right now, Q1 2026.
Okay, so they are putting massive drills in the ground. But before we get too excited, let's talk about the economics of the dirt itself. Because $44 million is a lot of money to spend if you aren't absolutely certain about what's down there.
Right. And this isn't just a gold mine, is it?
No, not at all. And that's what makes the valuation so tricky. It's much more strategic than gold.
The Elk Creek Project is, it's unique. It is the highest grade primary niobium deposit under development in all of North America.
Niobium, let's do a quick breakdown on that. That's the stuff used to make steel lighter and stronger, right? For things like bridges and skyscrapers.
Precisely. It's an alloying agent. You add just a tiny amount to steel and you significantly increase its strength. It's critical for infrastructure, pipelines, the auto industry, making EVs lighter for better range.
Got it. But that's not all, is it?
No. This site also contains the second largest indicated rare earth resource in the entire United States.
Indicated resource, that's a specific geological term, right? It means it's not just a guess.
Correct. It's important. You have inferred, which is like a good indicated guess. Then you have indicated, which means you've drilled enough holes to be statistically confident. It's bankable.
Okay, so niobium for steel, rare earths for tech. But I saw something else in the notes that really caught my eye. Scandium.
Ah, yes. Scandium, that is the wild card.
To me, scandium sounds like the unicorn of the periodic table. Everyone talks about it, but nobody seems to actually produce it.
That's a fair assessment. Scandium is incredibly potent. It creates aluminum alloys that are just unbelievably strong and lightweight, perfect for aerospace.
Fighter jets, that sort of thing.
Fighter jet frames, missile components, you name it. But the market for it is tiny because the supply, which is mostly from Russia or China, is so unreliable.
So NioCorp isn't just finding a mine. They're potentially creating a whole new domestic supply chain that just doesn't exist yet.
Exactly. They could change the entire global scandium market, taking it from a specialty material to a standard industrial one.
Okay, so the what is valuable. Let's talk about the how. Mining is usually a dirty business. But I saw something about a railway system. Sounds like a roller coaster for rocks.
It's actually not that far off. This is a fascinating piece of the puzzle. Originally, the plan was a big, expensive twin-shaft design.
Like an elevator.
Right. But they switched to this railway system. Think of it as an all-electric light rail train that runs autonomously underground on a loop.
A really efficient subway system inside the mine.
Basically, and the implications are huge. It replaces that expensive shaft infrastructure, and it's all electric.
So no diesel fumes underground.
Exactly. That cuts ventilation costs like you wouldn't believe. And in 2026, with the focus on ESG, having a zero-emission underground system is a massive selling point.
Okay, that sounds great on paper. But let's switch gears to the elephant in the room. Money. NioCorp is pre-revenue. They are burning cash. How are they paying for this $44 million portal?
That is the critical question. And for that, you have to look at the fine print of their recent filings.
I did. So on January 20th, they filed an S-3 registration statement. And there's this thing called a standby equity purchase agreement with a group called YAIIPN.
A classic backstop.
Can you break that down? Standby equity purchase agreement. Sounds like a credit card that gets paid off in stock, right?
That's a cynical, but yeah, fairly accurate way to see it. It's a financing mechanism where they can sell shares to this group whenever they need cash, up to a certain limit.
But that means dilution for existing shareholders.
It does, yes. But in the world of junior mining, dilution is the oxygen you breathe. The key is that it gives them liquidity certainty. And they recently reported a record cash balance.
Which is key.
It is. It means they can fund this portal right now without waiting for the massive full project financing package to be finalized. They can start the work while they negotiate the big money.
So they're buying time. Spending money now to show progress, hoping that helps them secure the billion-dollar check for the rest of the mine later.
Exactly. It's a calculated risk. You build the portal to de-risk the project for the banks.
And while you're looking at financials, I was looking at the geology. You don't spend $44 million bigging unless you're sure about what's at the bottom.
Well, fair point. You don't want a portal to nowhere.
Right. So on January 17th, they released drilling results. And the assays, the lab tests, confirmed that the mineralization is exactly where their models said it would be.
So no nasty surprises.
No surprises. It just validates the geological model right before they start spending big. It's a huge confidence booster.
And that matters. Confirming the model reduces the technical risk, which is one of the boxes the big lenders need checked.
Okay, so let's recap. We have the tech with the rail there, we have the cash for the portal, and we have the dirt confirmed. But we also have a stock price that dropped 8% on the news. What is the market worried about?
Well, to understand that, we have to look at the macro picture and the sentiment. There are some incredibly strong soft catalysts, but there's also a lot of fear.
Let's start with the tailwinds. Why does the world need NioCorp right now?
2 words: national security.
Because of the Scandium.
The scandium, the rare earths, all of it. Currently, the United States has 0 domestic production of scandium. 0. And it's vital for the Department of Defense.
And I imagine the Pentagon isn't thrilled about relying on foreign supply chains for that.
Not at all. The U.S. government is pushing incredibly hard for domestic critical minerals. NioCorp is positioned to be the first U.S. scandium producer in decades. It's a strategic asset.
Okay, so Uncle Sam wants this to happen. But what about the regulatory hurdles? We hear horror stories about mines taking 20 years to get permitted in the U.S.
That is where NioCorp has a massive moat. They have already done the heavy lifting. They have all the federal, state, and local permits.
All of them, even the environmental one.
The big ones are done. The Army Corps of Engineers 404 permit, the Nebraska Air permit, they're in hand. That gives them a 12 to 24-month head start over any potential competitor.
That is a legitimate advantage. So permits are done, strategic need is there. What do the analysts on Wall Street think?
The consensus right now is a moderate buy. The consensus price target is sitting at $8.32.
Okay, so from around $6, that's about a 37% upside. Pretty healthy.
It is. But, and here comes the cold water, the valuation. The stock is trading at a price-to-book ratio of 5.2.
Oof, 5.2 times book. For a company with no revenue, that is rich.
It's very high. It means the market has already priced in a lot of future success. You're paying a premium today for profits you hope will appear years from now.
And that explains the drop last week. The good news came out and the stock fell. It smells like execution risk. The market is saying, okay, great, you're building, but can you actually finish it?
Precisely. Which brings us to the debate. The bull case versus the bear case. I'll take the bull.
Go for it. Why does NioCorp win?
The bull case is built on 3 pillars: the moat, the action, and the strategy. First, the moat. A high-grade deposit with all the permits, that's a fortress.
Yeah.
Second, the action. They are actually building. Every meter they dig increases the certainty of the project.
And the third pillar.
Strategic value. If you believe the U.S. needs domestic scandium and niobium for EVs and defense, then NioCorp is the most logical answer. The bull case says this project is simply too important to fail.
That's compelling. But let me put on the bear hat, because there are some glaring red flags here.
Let's hear them.
Risk number one, financing. Yes, they have $45 million for the portal, but the whole mine, the processing plant, that's hundreds of millions, maybe over $1 billion. And that is not secured yet.
True. That's the biggest overhang on the stock.
So they dig a hole, and then what? If they can get the big check, they just have a very expensive tunnel. Risk number two is that valuation. At a 300% run-up and a 5.2x book value, it is priced for perfection. Any delay, and that premium could evaporate fast.
It's a classic prove-it market.
Exactly. So with all that, what's the verdict? How do you score it?
I'd give the investment thesis a 7.5 out of 10.
Solid, but cautious. Not a table bounder.
No. I view this as a trade, specifically a 6 to 12-month swing trade. This isn't a buy and hold for 20 years just yet.
So what's the trigger? What are we watching for?
The event is the announcement of full project financing. The second they announce they have secured the funding for the entire mine, the stock essentially re-rates.
Because the risk of failure just plummets.
Exactly. The risk profile collapses. You could see a 30 to 50% move higher almost instantly on that news.
So you're buying the dip at $6. That's a ticket to that specific event.
Precisely. The current dip offers a balanced risk-reward. You are buying a company that has started construction, which protects the downside a bit while you wait for that big financing news.
Let's just circle back on that. The government angle. Is there a realistic chance of Uncle Sam writing a check here?
It's speculative, but highly plausible. The Department of Defense has specific budget allocations for this kind of thing. Creating a domestic scandium supply fits their mandate perfectly. A government loan or grant would be a huge validator.
The ultimate stamp of approval.
Exactly. And that ESG angle with the rail there helps. An all-electric mine in Nebraska is an easy political sell.
So to wrap this up, NioCorp is a high-stakes play on American critical minerals.
And the immediate catalyst is happening right now. They are breaking ground, moving from theory to reality.
But the big prize, the thing that gets us to that $8 target or higher, is that full project financing announcement we expect later in 2026.
That's the key. Without it, the ceiling is capped.
Until then, keep an eye on two things: cash burn and construction progress. If they dig fast and spend slow, the stock should do well. If not, well, it's a different conversation.
A much less fun one.
Indeed. One final thought for everyone listening. If scandium really is so critical for the next generation of fighter jets, what happens if NioCorp doesn't succeed? Who fills that void? It's worth thinking about just how too important to fail this project might actually be in the eyes of Washington.
That is the billion-dollar question, and usually when the government needs something that badly, they find a way to make it happen.
Thanks for joining Smart Wealth with Joshua. Don't forget to subscribe and comment below on what stock we should analyze next.